It's been an interesting set of months for the world, not only for the watch industry, but also for the world of Rolex. 2022, we saw a significant drop in prices for several references. While some analysts and enthusiasts dubbed it to mean a price correction after a stretched out period of constant hype, others were starting to think Rolexes were no longer the investment beasts they once were. What if we told you that Rolexes are still the undisputed king of investments? Strap in and find out exactly why Rolexes remain the smartest investment choice in this video. It's no longer news that the watch industry had a rocky calendar in the market last year. To put it simply, it is volatile. In a short while, the prices of luxury watches soared astronomically, with some of them demanding twice and even thrice their usual retail price. But, like a thief in the night, something chilling and unpredictable happened. Just as fast as the watches were dramatically soaring in price, a downturn happened. The massively inflated watches crashed down in market valuations. Imagine you've reached the top of a cliff where the only way forward leads you down. If you're watching this, we're almost certain you're not in such a predicament, but have a mental picture of it. It perfectly describes the watch market. Not too long after reaching the top, the prices of luxury watches went on a rapid free fall. There are a couple of reasons why the value of watches can rise or fall. Several external forces like inflation, governmental policies, and even confidence in the global markets play a huge part, and that's not even all. We still have several internal factors like the grey market, supply to demand ratio, and ironically a rampant supply of luxury timepieces in dealers' stores that can either make or break the watch market. On the surface, a sharp decline in value seems like a good thing. One may even think, who exactly is this bad for? While you'd be forgiven for having the simple assumption, do you know it's easily a grey area? On the other hand, the watch consumer who stayed patient over the last 3 or 4 years became the big winners. Instead of paying astronomical amounts to get the timepiece they long for, they were able to buy them from the pre-owned market and even authorised dealers for great prices. However, just as the concept of winners exists, so do losers. On the other hand, the watch consumers who were either responsible for the bubble or actively took part in it, at the very least, were hurt the most. Thanks to the exorbitant rate of the bubble, a lot of watch consumers paid top dollars to get various timepieces with the mind of selling them off in the future for massive profits. When the timepieces of the said watches plummeted, so did their aspirations. A lot of the consumers in this category ended up counting their losses by selling their watches cheaply. Just in case you weren't aware, let's look at some interesting statistics from Watch Charts, a solid research platform. According to the analysis, the secondary market for luxury timepieces fell by a staggering 8%. But here's where things would surely leave your jaws dropped. Despite the said analysis of the luxury watches secondary market falling, did you know Rolex and other luxury watch brands like Patek Philippe performed better than cryptocurrencies and stocks in 2022? The S&P 500 stock index dropped by 19%, and Bitcoin, arguably the most influential and widely known virtual currency, had a staggering decline of 65%. Everyone who knows a thing or two about luxury watches is familiar with the big 3 luxury makers: Patek Philippe, Audemars Piguet, and Rolex. Saying the trio dominates the market is an understatement. They have a combined market share of 70%. Led by losses from the popular GMT Master II, the Daytona, and the Submariner, the second-hand prices of Rolex slipped by 5% in the last quarter of last year. But how about the other 2 players in the triangle? In the final 3 months of 2022, the prices of Audemars Piguet and Patek Philippe dropped just under 7%. With that in mind, not only did Rolex perform far better than other investment forms like cryptocurrency and the stock market, but also the brand fared better than the fellow big boys. Just in case you still have doubts about Rolex, how about we dissect what led to the fall in pre-owned values in the first place? In light of the unprecedented rise in prices in 2021 and the first quarter of 2022, driven by pandemic buyers and crypto traders fresh off massive profits, both looking for means to spend or invest, the prices of high-end Swiss watches eventually had a sharp drop in the secondary markets. But why? The biggest reason for the shrinkage in value was the flooded market. When the hard-to-find models like the Royal Oak from Audemars Piguet, the Nautilus from Patek Philippe, and the Daytona from Rolex suddenly became flooded in the market as individual investors and watch dealers offloaded their stocks, it had a domino effect. According to Bloomberg, in the last quarter of 2022 alone, the number of Rolex watches on the secondary market increased by 19%. For the entire year, Audemars Piguet watches on the secondary market rose by 78%, Rolex watches rose by 104%, and Patek Philippe timepieces rose by 110%. Just as previously mentioned, the aftermath of it was sensational. In the last quarter of last year, Rolex watches dropped by 5%, while Patek Philippe had a shrink of 6.7%, while Audemars Piguet lost by 6.8%. It's not difficult to figure out why it happened if you think about it. The reason why watches and other high-end accessories tend to astronomically shoot up in price boils down to the demand going way above the supply. When things get switched, with the latter suddenly outstripping the former for any reason, you can't expect things to remain the same. However, it's worth mentioning that despite the price drops, the rates at which the timepieces were valued in the pre-owned market were still above retail. According to Rob Reports, as of then, the price of the Patek Philippe Nautilus reference 5711A dropped from $240,000 to $190,000 in the secondary market. But did you know it was still 5 times more than the original list price of $35,000? At this point, it shouldn't be a surprise that timepieces can fetch their users a lot of money through investments. It's no surprise why a lot of watch consumers nowadays pick up timepieces with the mind of a potential selling off in the future to get sensational profits. With Rolex watches being the kings of retaining value over a long period and tending to do better than most of the competition when things head south, for example, the crazy shrink in value last year, it's easy to see why they're the fan favorites as far as investments are concerned. However, to make good profits, a good way is to carefully analyze the watches with the most tendency to get undervalued just before they get discontinued. This is because watches tend to significantly appreciate when they get discontinued. Given that Rolex no longer makes vintage watches, such as the iconic 1969 Rolex Daytona, some collectors' watches have increased in value over time by sensational rates. Don't take this as a no-brainer though. Not all collectors' watches in value are being discontinued. The good thing is that, unlike other investments like cryptos and stocks, such scenarios don't translate to mean the end of the road. Even though the investment prospects of a watch fall, there's always the relief that you'd have a timepiece beauty on your wrists. Not to mention it could be passed down to forthcoming generations. In line with this, Ashik Abbas, head of sales at a luxury watch boutique, states, "Watches are primarily a passion product. If it goes up in value, consider that a bonus. But in case the value goes down, you still have something you love." In summary, buying a Rolex watch means a splendid option for anyone keen on owning a timepiece from the brand or also seeking a tangible investment option. For those worrying about buying pre-owned watches that may end up having faults, you can rest easy. Rolex has a certification program for its pre-owned timepieces, where you can not only get great deals, but also get guarantees of its sustainability. The secondary market also offers watches that are hard to find and also no longer in production. What's not to love about it? If you're a newbie interested in entering the luxury market, there's hardly any reason you shouldn't get a pre-owned Rolex. You'd even bypass the age-old foe of Rolex, waiting lists. If you're entering the Rolex market to look for investments, you should know not all Rolex watches will sell well for significant profits as the years go by. You'd need to be picky if you want the best chances of getting profits. Despite the fact Rolex watches hold value over time, models like Rolex Daytona, the Rolex Explorer 2, and the Rolex Submariner offer the best returns as far as investments are concerned. Alas, even these specific models wouldn't guarantee a truckload of money in the long run. So many internal and external factors can influence what your watch will be worth in the future. To increase your chances, you may want to hold on to the original box and papers that came with your watch, should you still have it.